Have you ever seen a stock just explode out of nowhere and you're left wondering, what in the world just happened? Well, today, we're doing a deep dive into the wild ride of one particular company, Cycurion, to figure out the story behind its absolutely massive price surge.
So, get this. On September 25th, the stock, ticker CYCU, just rocketed up by nearly 70%. I mean, in one single day, it jumped from under 29 cents to over 48 cents a share. A move like that, well, it's going to turn some heads.
But what does a jump like this really mean? Is it the start of something big, a real trend, or is it just a flash in the pan? To figure that out, we've got to dig in and look for the clues hidden inside the data.
First up, let's get some context, because that incredible one-day jump didn't just happen in a vacuum. Nope, it was actually just the latest peak on what has been a total roller coaster for the stock all summer long.
Just look at this timeline. At the end of June, we're sitting at around 34 cents. It hits a high in July, but then, boom, it crashes all the way down to 18 cents by late August. And then, out of nowhere, you get this September surge that brings it right back to where it was at its peak. So, the big takeaway here? This stock is defined by some seriously extreme swings.
So, how do we even begin to make sense of these wild moves? Well, this is where we put on our detective hats and start looking at the technical indicators. Think of them as breadcrumbs left behind by all the market's activity.
To put it simply, technical indicators are just tools that help us analyze what's already happened, things like price changes and trading volume, to get a sense of where the stock might be headed. Now, they're not a crystal ball, of course, but they are incredibly useful for spotting patterns and understanding the mood of the market.
All right, our first and maybe most important clue is all about trading volume. You gotta follow the money. See, high volume is like a loud conversation at a party. It tells you that a lot of people are suddenly very, very interested. It means a price move has some real power behind it. And you can see that connection, clear as day, right here. On the 2 days with the absolute highest trading volume, the stock made its biggest jumps. That September 25th surge, it happened on volume of over 218 million shares. That tells us this move was powered by a massive wave of buying interest.
Okay, let's move on to our second clue. Here, we're looking at moving averages, which kind of smooth out the price action to show us the underlying trend. But this is where things start to get a little tricky, because the trends are telling us two very different stories at the exact same time.
On the one hand, if you look at the short-term picture, it is super bullish. The current price has just blasted past all the recent trend lines, and that's a huge sign of positive momentum. But when you zoom out and look at the bigger picture, the stock is still trading below its key long-term averages. And that suggests that, despite all the recent fireworks, the stock is still technically in a longer-term downtrend.
Our third clue comes from what we call momentum indicators. And a good way to think about this is like the engine in a car. This recent surge has pushed the RPMs way into the red zone. Sure, it's moving incredibly fast, but it might be getting seriously overheated.
Now, what's really powerful here isn't just one of these indicators. It's the fact that they're all saying the same thing. Indicators like RSI and MFI, they basically measure the speed and excitement behind a price move. And right now, all of them are signaling that the stock has gone up too far, too fast. When you see a bunch of different overbought warnings all flashing at once like this, it's a pretty strong sign that the rally might be running out of gas and a pullback could be on the horizon.
Okay, so we've got this battle, right? We have crazy strong recent momentum fighting against signs of being overbought and a longer-term downtrend. With all these conflicting clues, where could the stock possibly go from here? Well, the analysis points to three potential scenarios.
First, we need to know the key levels on the battlefield. This number here, just under 54 cents, that's the immediate ceiling. It's the resistance. For anyone bullish on the stock, that is the wall that has to be broken for this rally to keep going.
And on the flip side, this is the floor, or the support, right around 29 cents. If the price starts to fall, this is the line in the sand that needs to hold to prevent a much bigger drop.
So with that ceiling and that floor in mind, what could happen next? The analysis points to three main possibilities. First, the bullish scenario. The buying frenzy continues, it smashes right through that resistance and heads towards 60 cents. Then there's the bearish scenario. Traders who bought low start taking profits, and the stock falls back down to that support level. Or third, we could see a sideways move, where the stock just kind of bounces between those two levels for a while as the market figures out what to do next.
So, let's bring it all home.
What does all of this mean for someone trying to make sense of the stock? Well, it really boils down to one central conflict.
On one side, you have the bull case. You've got explosive momentum, you've got massive volume, and it broke through all the short-term trends. That's a really powerful combination. But on the other side, you have the bear case. You've got all those warning signs flashing overbought, and the hard fact that it's still technically in a long-term downtrend.
And that leaves us with the million-dollar question, doesn't it? The technical clues show us a stock with incredible short-term power, but it's also one that's flashing some pretty serious warnings. It just highlights the classic high-risk, high-reward nature of a stock like this, leaving everyone to wonder, which story is going to win?